JP Morgan now seeing a 75 basis point move by the Fed at this week's meeting. Let's bring in Ed Yardeni of Yardeni Research. All right, Ed, that seems where we're moving. You had the scoop that they're going to do 75, or at least it was, probable, or whatever words you want to use. Now you have Barclays, you have Jefferies, now you have JP Morgan. Do you have Yardeni?
Yeah, absolutely. Yeah, I think they are going to do 75 basis points. I don't think they would have planted that story in the Wall Street Journal unless they intended to do it. And I think that Powell on Wednesday, when he does his press conference, will indicate that there'll be another one coming at the July meeting and maybe another one at the September meeting. I think it's time for Powell to have his Volcker moment to show that he really is concerned about inflation. And at this point, I think the markets will actually be disappointed if it's only 50 basis points.
Well, when you say another one coming in July and another one coming in September, what is one?
Right.
Is that 75?
75, yeah. I think it'll be three consecutive increases of 75 basis points. I think the Fed has to get, yeah, I do. I think the Fed just has to get going with it. Look, it's not as though credit conditions haven't already tightened, but the Fed has to follow up and kind of lock it all in and deliver what the markets have been expecting. And I think that's where we're getting all this downside movement in the stock market.
Well, we teased into you today saying that you brought your odds of a recession up.
Yeah.
If you think we're going 75 on Wednesday and then 75 in July and 75 in September, what are your odds? 100%?
Well, no, that's why I think we are increasing the odds of a recession. The consumer, by the way, is still hanging in there. They have about $1 trillion of excess savings from all those checks that were handed out over the past 2 years. It looks like they're really dipping into those checks, and that'll probably keep them going for another 6 to 12 months, as Jamie Dimon of JP Morgan recently said. So I think that, we clearly are in a bear market as of today. We've been actually in a bear market with the benefit of hindsight since January 3rd, given today's drop of over 20% since then. And I think the outlook is increasing for the risk of a recession, but I'm not at 100%. I'm at 45%. Ask me again next week. Let's see how these next batch of economic indicators play out. But seriously, I think that there's that some of this recession concerns is being somewhat overstated. But I can't ignore the fact that we may very well talk ourselves into a recession, as you said, Scott.
What about in the here and now, Ed? How low do you think this move in the market is going to go?
I really don't know. I mean, it's kind of like trying to catch a falling knife here, clearly. But I think it probably has lower to go. I kind of looked to see where we were right before the pandemic, and we were around 3,400 back then. I guess it's conceivable we go that far back, but that I think would be mostly a valuation issue. I think as I've said before, I think we've got a problem with earnings valuation. The PE has been too high, and now it's kind of going. It's probably going to go too low for a time here.